Okay, ladies and gentlemen, how are you doing? First and foremost, welcome to the channel. My name is David Liciaga, CEO here at TruePro Financial. And, before anything else, I want to go ahead and just highlight today is November 1st, 2023. And I started recording this video prior to, and then I had a disastrous computer crash. And that's how come you see all the notes here. And we're going to go through a whole lot today. We're going to talk about business funding in particular and what it is that it looks like, how it is that we could go ahead and help you over here at TruePro Financial, TruePro Lending, and what it is that we could do for you and how it is that we navigate this whole entire business space. We're going to talk a lot about credit today. We're going to talk a lot about funding. We're going to talk a lot about what it is that you need to do if you want to go ahead and have success with your business funding and whether or not, this is something that you really want to undertake. So who are we and what do we do? First off, TruePro Lending. We specialize in personal and business funding with more than 20 different funding programs to choose from, okay? This includes investments, e-commerce, brick and mortar, real estate, passive income, and more. If you are interested in funding or even know what it is that you could qualify for, if you want to know if you are ready to undertake the funding process, what I want you to do is go to our website right now, trueprolending.com, click apply now, and put in all your information here. This is just soft information, and then our specialists will go ahead and be in communication with you and make sure that you get the right answers and that you learn what it is that you need to do, okay? Don't let money be the problem. We are your solution, okay? Whether you have previously experienced business funding or not, we are a complete marketplace. We have programs available for basically any type of legal business entity with startup programs as well, okay? Now, let's start with all this. I'm going to come and I'm going to make all of this white real quick so that it's hidden, okay? There we go. So let's start with this very, very straightforward business model. Okay, first question is, do I need business funding? And a lot of times people do not even consider this part, okay? So I want everyone right now to ask themselves, do I need business funding, okay? And the reason why I'm going to ask you this is a lot of times people come to me and they say, David, I need more money. For what? That is going to be my follow-up question immediately. If you're like, David, I need more money, I'm going to say, for what? Okay. Ask these questions internally. Take notes. Do you know what you will use business funding for? Okay. Do you already have a business that is profitable? Okay. Could your business be more profitable at scale? Do you have the systems in place to scale larger? And is funding the only thing to restricting your growth? And these are incredibly important questions. Okay. I'm going to hammer home a few things because I want to make sure that there's no misconceptions, that after you're done watching this video, you absolutely understand what it is that's going to be required for you to be ready for business funding, okay? I'm going to be with you for a while. I expect this video to go on for at least an hour. And, when we're done, hopefully you get a much, much better picture of what it is that it looks like. So do you already have a business that is functioning and profitable? That's question number one. If the answer to that question is yes, okay, then I need to begin to ask you, could your business be more profitable at scale? Okay, and to really highlight this, I want to go back and I want you to think about when the car was first created, okay? And that was just a labor of love. If I'm being completely honest, if you go through all the notes and how the first cars were created, the Model T and you begin to understand that it was so much work. And then something happened with Henry Ford. Henry Ford is the person that created what we know as the assembly line. And so he created a system that enabled him to create these cars more efficiently, okay, at a cheaper cost. And when he did that, he completely revolutionized the way that people do business. Why? Because now it wasn't just about being skilled and being able to take something from point A to point Z. It was literally being able to do one thing and one thing well, and he trained his individual workers on doing one thing well so that they were able to move faster. And when they were able to move faster, this created scale. Okay, and then eventually introduced robots that were doing a lot of the work, and now the scale became even faster and faster and faster and faster. And so Henry Ford, when he created the assembly line, he is the perfect example of, could your business be more profitable at scale? The answer to that question was yes. Okay. Do you have systems in place to scale larger? Because if you're putting together cars one by one by one by one by one, yes, you're making money. Yes, you could be profitable. There's no question about that. But the question is, are there systems in place to scale it larger? Or are you, really a slave to the process of creating? Okay. And the reason why I ask you this is I encounter this a lot of times with artists. So someone likes to paint. Okay, so they're making these beautiful paintings, and when they make these beautiful paintings, people are paying them a whole bunch of money for their unique artwork. But the problem is they only have the capacity to paint one painting at a time, right? So even though they have two hands, they don't have the capacity to sit there and paint two separate paintings at the same time. And so without creating, a system or training other people to do what it is that they do, they cannot just scale their artwork. Okay, so in case of an artist, okay, could your business be more profitable at scale? Okay, I'm going to say yes. Okay, do you have systems in place to scale larger? In case of an artist, the answer is no. Now, the reason why I'm bringing this up is I want you to think about your business. I want you to think about what it is that you do and how it is that you do it. Do you have the systems in place? Okay. If the answer to that question is yes, if your business could be more profitable at scale, and if funding is the only thing restricting your growth, then you are a perfect candidate for business funding. Now, if you do not have the ability to scale, if your business isn't going to be more profitable at scale, okay, if you need things other than just funding in order to grow, then honestly, you have some other things to figure out. Okay, I'm reminded of one of my buddies. He once ran a pharmacy. Okay, and when he was running this pharmacy, there was medication that came out specifically. It was an inhaler for COVID. And they were billing Medicare and Medicaid for it. And at the beginning, their co-pays were sky high. They were making a whole bunch of money. So it would cost them about $50 in order to acquire a client, but they were making about $450 to $500 per inhaler. Okay. And so all of a sudden, that's a great business model. Could that business be more profitable at scale? Yes. Did they have the systems in place to scale larger? Yes, they hired a whole bunch of people in order to make the phone calls, in order to get more business in. Okay, is funding the only thing restricting the growth? And this was the one question that they failed to ask, because Medicare came and they changed the pricing of what they were paying for the inhaler, to the point that now the company was paying more to acquire a lead than the cost of what they were getting paid back from Medicare for the inhaler. And so on that one, the answer is no. So it didn't matter if we gave them $1 million in business funding, $10 million in business funding. And I want you to hear me and hear me good. If every single time they spend $10, they were only making $5, then spending $1 million makes no sense. You're going to lose 500,000, right? So you need to think about your business in particular. Okay, what will you use the business funding for? And now here comes the more important question, because a lot of people that come, they are convinced that they need money because they've heard this whole entire thought process of you need money to make money. Scared money don't make money. And yes, that's true. Okay, but do you have a business that you would like to launch? Think of things like automated Amazon stores or software as a service or white labeling another profitable company. A lot of times what these companies will do is They will come up with the business model. They will come up with the plan. They will have their own consumer base. They will have their own user base. And then they come back and say, well, we have been so successful with this business model that we want to go ahead and really focus in on bringing in some corporate clients in order for them to sell to their customer base, and we're going to take a small percentage but charge them a lot of money up front. And sometimes that is the biggest shortcut to success. And the reason why it's a shortcut to success is because a company has already done the program, and the company has already done the research, a company has already created the platform, and it's literally plug and play. Okay? But there is a big question there. If you are going to launch a new business, okay, and you are using business funding to launch in the big business, are you working with reputable people and companies that could grow your business? Have you checked out all of their results? Have you communicated with other clients? And if the answer is no, then do a little bit more research. Listen, I'm all for making sure that businesses have the funding that they need in order to operate. But I'm also about responsible borrowing and responsible lending. Like, if we are going to be reckless in the way that we lend or reckless in the way that we borrow, then it's better that we not do it at all, because lending has its own risks inherently, just like borrowing has its own risks as well. Okay? And why does lending have risks? Here's why. I'm going to go right into Lending Tree. I want you to see this. Let's see. First 5 years. Okay, and this is the important thing that you need to go ahead and really keep in mind. This is basically the same thing, but let's just take a look at something. Look at these astronomical numbers, guys. Alabama, businesses that fail in the first year, 19.5%. Businesses that fail after 5 years, 47.9%. But look at all of these states, guys. Some of them are 50% or more. Businesses after 10 years that fail, guys, all in the 60s. Okay, you need to understand that there is risk in businesses. Okay, and I was on a page earlier today. Maybe is it here? Here we go. 18.4% fail in the first year. 49.7% fail in the first 5. 65.6% fail within the first 10. So if I am a bank, and I want you to stop and think about this. If I am a bank and I am lending out money, and you are a brand new business, am I going to lend you a lot or a little bit? Probably not that much. Why? Because I understand that 20% of you guys are going to fail. Nearly 20% are going to fail in the first year, and nearly 50% are going to fail in the first 5 years. And if you're not able to pay, then I am left up the creek without a paddle. Okay? And now I've lost money. Now, when you are thinking about undertaking a business, you need to keep this in mind too. Have you sat there and have you done all the research to make sure that you are prepared to actually weather the storm and not be one of these statistics of failure? And I hope the answer to that is yes. Okay. Now I wrote all this stuff out, and so we're going to go through this so that there's no misconceptions. Common misconceptions. My personal credit score doesn't matter. Okay. False, 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 false. Your personal credit score absolutely matters, and it matters a lot, especially if you are a brand new business. You want to know why? Because the companies that are going to loan you funds, what they are going to first do is they're going to check out your personal credit worthiness to make sure that if the business doesn't work out, which the likelihood that it won't is higher than not, then they want to make sure that they have you on the hook in order in order to pay back whatever loans they have given or whatever credit cards they've given, in order to make sure that they do not become insolvent, that they are not left with the bag, that they are able to still remain profitable. Okay? So you are going to need to be the guarantor. And literally, I'm working with a client on this right now. Typically, that guarantor needs to own the majority, if not the entire business, because the lenders want to make sure that the person that they are lending the money to, the business that they are lending the money to, and the person that is on the hook for paying it, that they both have a vested interest in the business doing well. Okay. A guarantor, someone that's either an individual or a business, is responsible for the debt if the business cannot pay it back. Okay, you are always going to be a guarantor if you are a brand new business. It protects the lender against bankruptcy or insolvency. And with a guarantor in place, the business plan doesn't matter all that much. Okay, it doesn't matter all that much. Now, it does matter. Okay, but if I come in, and let me go ahead and give you an example. If I come in and I tell you I want to borrow $10,000, cool. And granted, we secure a lot more than $10,000 for our clients. But if I come in and say I want to borrow $10,000, and you take a look at how much I earn, and you understand that I'm earning $150,000, $200,000 a year already without the business, and I'm asking for $10,000 for a startup loan in order to start a business, you would probably feel very, very comfortable loaning me that money. Why? Because you understand what my influx of capital is. And if I were to fail at the business, the likelihood that I could repay that loan is very, very high. Okay, and that's the way that all these lenders are going to look at you. Does it make sense? Is the risk worth it? And if the answer is yes, then the answer is yes. Now, the guarantor needs to have good credit, and specifically they need to have a good FICO 8 score. And the reason how come I am giving you the number is because a lot of these companies out here that do the personal credit monitoring, they're not giving you, first off, they're not giving you a true FICO score, and even more rarely are they giving you a FICO 8. But this is what most lenders are going to look for. They're going to look for your FICO 8 score. So doesn't it make sense that if you are going to be looking for funding for your business, that you're going to want a good FICO 8 score? And the answer is yes. Now, what else goes into good credit? Okay. You want a low debt to income ratio. So you want less debt, more income. Okay. You want low credit utilization, usually under 10%. Okay, so what this means is, let's say if you have $100,000 of credit card spending, it cannot be over 10,000. Okay, and that's incredibly important. Making sure that your credit utilization stays low enough is incredibly important to make sure that we are able to get the lending that you want. Okay, limited inquiries. Okay, and this is important for you guys to understand as well. Every single time that you apply for a credit from any company, an inquiry hits your credit report. And what that does in particular is it alerts all these other lenders that you're looking for money. And I want you, if you are driving down the street and you see someone holding up a sign that says homeless and hungry, any little thing helps. But you see that person every single day doing the same thing. You might give to them the first time, but if you see it day 2, day 3, day 4, day 10, day 100, are you going to keep on giving to that person? And most of the time, the answer is no. And why is that? Because they are asking for money too often. Okay? Banks look at people that are asking for money the same way. They look at them as beggars, as someone that are desperate for the money. So the likelihood that they are going to be able to pay it back is slim to none. That is an irresponsible risk. They're just not going to do it. Okay? No collections. No bankruptcies. No charge-offs. Okay, let's know what collections are. Collections are you have an agreement to pay on a credit card or an installment loan or a student loan, right? And all of a sudden, you're not able to make that payment for whatever reason. Your income goes down, your debt to income ratio isn't good, and now all of a sudden you're not able to meet your minimum required payment in order to keep the loan in good standing. If you are not able to keep the current credit that you have in good standing, then why would banks believe that you are going to be able to keep other credit in good standing? And the answer is they wouldn't. Okay. And so they are going to look at that as a big strike. Bankruptcies. Bankruptcies mean that your collections and everything else got so out of control, okay, that you needed to, that you left the banks with all your debt and started with a fresh slate 9 times out of 10. And when this happens, okay, it stays on your credit report 7 years. And now everyone knows that, listen, he is an irresponsible borrower. So we're not going to loan him any more money. And then no charge-offs. Charge-offs are a lot like collections. So, you have an agreement to pay, you don't pay for long enough, and then the bank says, we believe that he's never going to pay. He hasn't declared bankruptcy, but we are going to charge this off at the end of the year, so at least we could write it off as a bad debt and save some money on taxes. Okay, so when we take a look at all of this, like these are the things that we look at, and then we also look at a good mix of credit types. Okay, so this includes auto loans or mortgages or installment loans or credit cards, right? And then we look at the length of time for credit. Okay, because the longer you have shown responsible borrowing, the more likely it is that you are not going to default on something. And so if you have good credit, what you are signaling to the banks is you know how to handle money. I'm going to come back into a few things, and we're going to talk about why this becomes so important. But before we go on, today is November 1st, 2023. My name is David Liciaga, CEO of TruePro Funding. And honestly, if you have not submitted your information yet, go to our site, TrueProLending.com. Let's kickstart your business. We have things from zero interest business funding, business term loans, revolving lines of credit, personal funding, SBA, real estate loans. More and more and more, guys. Fill out our simple application, okay? Now, look, guys, Griffin got 81,000. Giovanna got 49. Alden got 99. Brittany got 111. Maureen got 96. And even as of late, we are seeing in the realms of $250,000 plus per client. We have secured over $12 million in funding for over 450 clients who are 20 plus programs, okay? And we guarantee, okay, to obtain the optimal amount of funding that you qualify for. Okay, it is in our best interest, in both of our best interests, to make sure that your business is well funded, so that it is able to be profitable, so that you continue doing business with us and you come back time and time again. Very, very simple application process. Name, email, phone number, roughly what your credit score is. We're going to delve into this a lot more deeply and make sure that you understand what your true credit score is, monthly income and revenue, how much funding you're looking for, and whether or not you already own a business, okay? Takes 5 seconds. I am going to highlight over and over again, guys, do not take shots in the dark. And the reason why I'm saying this is very clear. I deal with so many people that come in, for business funding, and the first thing they do is say, I have bad credit, so I know I'm not eligible for funding. I need to fix my credit before I get ready for funding. And yeah, you may have bad credit, and yeah, you may need to fix it before you get ready for funding. But doesn't it make sense to come to a team of specialists that know what they're doing, that have relationships with banks, find out how it is that they're going to be able to get your credit to the point that it needs to be, knowing what the banks are already looking for, rather than you just trying to do it on your own and potentially messing it up and slowing up the process for you to get your funds? I think it makes a lot more sense to work with the professionals. This is completely no obligation. You put in your information, we'll give you a call, we'll find out more about your situation. And if you like the way that we do business, let's do business. If you don't, listen, no sweat off our back. We love working with people that love working with us. Okay, so let's continue going down the line. Non-guarantor. So a lot of times when people think about business funding, they think about non-guarantor. Okay, this means no one is guaranteeing the loans. These are few and far in between. Okay, because you need a proven business, you need a profitable business, you need a business that's been in business for at least 3 years. Why? Because that limits the exposure for the bank. You're going to want to see tax returns, okay, because tax returns that are filed with the IRS lets the banks know how much money you're really making. They are able to see your profit and loss, a P&L statement, okay, and it has assets, okay. For example, if I am seeking $100,000 in business funding for an exotic car rental company, but I already own 3 Rolls Royces, 2 Lamborghinis, 5 Ferraris, etc., 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 and I'm only seeking $100,000, the bank is going to be like, fine, you want to know why? Because if he doesn't pay, we'll just take a Rolls Royce and the Lamborghini. Okay, and so if you have assets, you can leverage those assets in a way for you to get more funds in order for you to continue to grow your business. Now, that being said, because of where we are right now in this time, I'm going to be very clear in letting you know that there are not a lot of banks that are loaning on real estate right now. Not for business. You want to know why? Because right now, when you take a look at the climate for real estate, it looks a lot like 2008. Now, if you don't remember 2008, let me go ahead and refresh your memory. In 2008, banks were selling, they were giving out loans, adjustable rate mortgages, to people who were less than qualified for the funding that they were going after. And then they would tell them, listen, the market's going to correct itself in 6 months, a year. Your payment is going to be lower because of da-da-da-da-da. And then what happened? What happened was a collapse of the entire market, and now all of a sudden, interest rates went up, and no one was lending. And now people found their mortgages were sometimes double as much as they originally were. And that created a domino effect where people were losing their houses, and now the banks were stockpiled on real estate. And as someone that has worked with real estate professionals, I can let you know that when you are flipping houses, or when you are building houses, or when you are, rehabbing houses and renting them out, when you are working in the real estate market, you are going to hear a phrase from time to time that lets you know exactly how real estate professionals feel about real estate. And the phrase goes like this: brick rich, cash poor. Brick rich, cash poor, which means, listen, I may have $5-10 million worth of property, but I have less than $10,000 in the bank. So yes, on paper, my net worth is high, but the flexibility that I have to exercise that net worth is super low. And right now, banks are literally, and I was just in a bank today. I'm not going to tell you which bank or which branch or any of that, but I was just in a bank today, November 1st, 2023, in a bank today, and they literally told me that if I was in real estate development, they are not lending out for real estate developers now. And all you need to do is, if you don't believe me, go into your bank and ask them if they do a home equity line of credit, okay? A HELOC, okay? HELOC, HELOC. And here goes homework, right? HELOC, home equity line of credit, okay? A HELOC, what it basically says is, okay, you bought a house, let's say you bought a house for $250,000, you paid off $150,000 of it, it got reappraised, and now it's worth $300,000. You paid off, you only owe $100,000. Now there's $200,000 worth of equity inside that house. It stands to reason that you should be able to borrow from that against the house in order to make some improvements in the house, or in order to pursue some business, or in order to, manage your debt or consolidate debt and lower your payments. There are a lot of very, very savvy things you could do if you could access the equity that you have built up. But if you go to just about every major bank, I know right now, my previous mortgage was with Wells Fargo. And I needed to sell my house. Why did I need to sell my house? Because I first inquired about a home equity line of credit so that I wouldn't need to sell my house. Okay. And they're like, we're not offering it anymore. Then my mortgage got transferred to Freedom Mortgage Corporation. They weren't doing it. I went to several different banks and I found out because I was trying to find a way to maintain my asset, while opening up some credit. And the more and more that I talked with banks, the more and more that I realized that there weren't banks that were offering this product at this time because of the timing of where we are at right now, because of the entire sentiment of the market. And that is overly negative, that there is a real estate crash coming. We just do not know when or where or to what length, but we do understand that the likelihood that the market is going to crash is high. And because the banks understand this, what they do not want to do is sit there and loan out money based on appraisals that are inflated and then turn around and be left holding the bag. Because let's say if today your house is worth $500K, but then in 3 months, the market crashes and your house is now only worth $300,000. But when you took out a home equity line of credit, you were able to access $200,000 worth of equity. Okay, but now, so it was worth 500. You were able to access 200,000, which means you owed 300. But now your house is worth 300, and you have $200,000. You're upside down. So it's not just about having assets. It's about having the right assets that appreciate, the right assets that hold value. And there's this great story that was told about someone, and I'm not sure what year, but I'm sure 50s, 60s, 70s, right? He goes into Chase Manhattan in the middle of New York to get a loan against his car. It's a Rolls Royce, and if you look up the story online, you're going to find it, and they probably do a much better job of telling it than me. And essentially, he says, "Listen, I'm going on vacation for 3 months. I want to take a loan out against this $100,000 car. I only want $10,000." Banker looks at it. He's like, well, the car is worth $100,000. It's only a $10,000 loan. If he doesn't pay it, then we're able to go ahead and realize a $90,000 profit. Okay, so that math is real simple. What they didn't understand is how the guy was using them, because the guy had already done the math. He's like, I'm going to be gone for 3 months. 3 months on $10,000 is literally about $400 or $500 worth of payments. So what the guy did is he took $10,000, right, threw it in the bank and just held it there. Came back at the end of 3 months, paid the little $400 or $500 worth of interest over those 3 months, and paid him back the $10,000 and rolled off with his car. And so when the banker saw this, the banker said, "Well, why did you even take out the loan in the first place?" And listen to how clever this guy was. He said, "Where else was I going to find parking for 3 months in Midtown Manhattan for less than $200 a month?" You see, and so, and the reason why I bring up that story isn't because we need to be that clever all the time. It's just that, honestly, there are ways to get around things if you are willing to explore what it is that you have and what it is that you want and how it is that you get there. And I am going to hammer home that if you have not already, let's go to TrueProLending.com. Let's put in your information. Let our specialists help you come up with a plan for you to actually get the amount of business funding that you need. Okay, now I want to go into another common misconception. The type of businesses do not matter. Furthest thing from the truth. And I probably did a better job of this when I was recording this the first time. Okay, but let's say you came up with a company name called Cocaine Dealers Inc. You could create a company called Cocaine Dealers Inc. Would you be able to get funding for that company? No. Why? It's illegal. We cannot fund illegal enterprise, guys. And I hope this makes sense. So if you want to come up with, Wise Guys Incorporated, think about all the problems that the record label Murder Inc. had just because of who they were affiliated with and their name. They needed to do creative rounds of funding just because their name restricted them from being able to get certain types of funds that other people could get. We can't do illegal. Now let's take a look at Aggressive Forex Traders LLC. Are you going to get funded? More often than not, no. Why? Because it's high risk. Okay, and if you want to see whether or not your industry is high risk, here's how you go: high risk pay, because merchant accounts and lending are both very similar. So if you go into this and you see adult merchant account, that means, pornography, adult toys, etc., guys, you fall into that. Are you going to get funding easily? The answer to that is no. Okay, if you're dealing with bad credit, are you going to get funding? Answer to that more often than not is no. If you deal with CBD, even though marijuana is becoming more and more legal around the US, are you going to get funding for that? No, because there's so many laws, so many restrictions around that. Okay, e-cigarette and vapes, hard. Travel, hard. Startups, hard. Okay, guys, go to high risk pay. If you're not sure, go through. All right, look at this: continuity, credit repair, dating app, e-commerce, adult merchant, bad credit, CBD, debt collection, firearms, high volume, MLM. Okay, I've made a lot of money in multi-level marketing, getting merchant accounts that work with it, very difficult. Online pharmacy, guys, ticket brokers, travel merchant, tech support, goes on and on and on and on and on. And if you want even more, go to the high risk merchant, high risk lending. Okay, now I talked about real estate. So let's say I create a company called David's Real Estate LLC. Can I get funding for that? And the answer is yes. But what kind of funding could I get for it? Real estate only. Maybe a couple 0% interest cards. Why is that? Because inside the name, I'm telling you what it is that I do. So if I tell you all I'm doing is real estate, but you are comfortable lending out to marketing companies, would you lend out marketing dollars to a real estate company? And the answer to that, more likely than not, is no. Why? Because it is outside of the industry that I'm telling you I'm a part of. Same thing with David's Car Rental Business LLC. Okay? Now you're looking at specifically lending for me to be able to get cars. Okay? Now, and then you have this. Look at this: Philadelphia Management Services. The type of business matters, but the name also matters. Management and marketing, guys, it goes very, very far. It's something that a lot of lending goes out for. And so this is obscure enough or, nondescript enough that people, when they see this, are like, oh, he might be the type of person that we lend funds to. Okay? Now, once again, on today, on November 1st, 2023, if you have not already, I want you to go to our website. Okay, I want you to click the Apply Now button. I want you to put in your information. And when you put in your information, we're going to go ahead and we are going to take a look specifically at your situation. We're going to deal with the information that you give us. If we need more information, we'll have you pull a full credit report. We'll do an analysis and tell you what it is that we need to do. If we need to fix your credit, guys, we need to fix your credit. If we need to bolster your income a little bit, we need to bolster your income. But we're going to be completely honest with you so you know what it is that you need to do in order for us to actually help you get the funding that you need to either build the business that you currently have or to launch a business that you currently want to launch. Okay? You can call us as well. Guys, you can go through our funding programs and you can see everything. Smart Credit, we are partnered with them, guys, so that we are able to see all your credit. So, and all your credit and where it is that you stand. Okay, so common misconceptions. So the big question is, well, why do business funding at all? Okay, And this one, I'm going to bring all the way down here. Why do business funding at all? Okay, and here we go. Number one, creates a new credit profile. Okay, business profile. Remember back up here when I was talking about guarantor versus non-guarantor? Now, I didn't cover this. It's Dun & Bradstreet. It's basically a business credit bureau. When we deal with personal, we talk about three major ones. Now, there are more than three, but the three major ones are Experian, Equifax, and TransUnion. Okay? All three of those collect your data. All three of those have different scores. All three of those have different metrics. And when you are dealing with those metrics, what ends up happening? What ends up happening is based on what the three have and whether or not all the data is synced and all that other stuff, the credit bureaus come up with a credit worthiness profile and tell you whether or not you are eligible for credit. Okay, the banks have different algorithms to go through and analyze all this and come up with what works the best for you. Now, in regards to why do business credit at all? Because if you have a great business credit score, okay, and okay, affords the opportunity to make profits, and you have a profitable business, after a few years, the same business that you needed to be a guarantor for at the beginning could come back and get funds that are non-guaranteed by you. Okay, so and this is what, you know, most people don't get. When it comes to business funding, it's very straightforward. The less of a risk that you are, the more money you are going to get. Okay, here is probably the most important part. When you don't need the money, people want to loan it to you. When you need the money, nobody wants to loan it to you. Okay, this is something that I have experienced in my own personal life. I mentioned multi-level marketing before, and you know, literally, and it's here on the side. I'm going to show you this ring from a company called Epic. Very nice ring, whole bunch of diamonds in it, et cetera, et cetera. This was a gift. This was a gift for when I hit $100,000 a month in that business. And when I hit $100,000 a month in that business, guess what? Everyone and their mama wanted to line up and give me money. Everyone. Everyone. Oh, David, why don't you get this $25,000 credit card? Oh, David, why don't we give you a $200,000 loan? David, you could absolutely afford this $500,000 car. Everyone wanted to give me money. Everyone. And then something happened. That business, the company I was doing business with went out of business. And now I was trying to plan my next move. And I did not understand this at the time, which is part of the reason that TruePro funding was even created. Okay, it was created specifically, ladies and gentlemen, because when I needed the funds in order to launch another business, even though I had proven a tremendous track record of success, guess who would lend to me? Nobody. And that was a real tough pill to swallow. So when you think of business funding or business credit, here's what I want you to think. Better to have it and not need it than need it and not have it. There are stories upon, there are literally, there is a litany of stories that you can listen to about people who are able to make fortunes because at the time that funds were required, they were able to make strategic investments. Actually, original Apple investors. Let's take a look at this. Okay. Armis Clifford Mike McCullough Jr. Okay, he owned 26% of Apple. He was the first chairman and second CEO. Okay, how much did he give? Okay, he gave them 91,000 in additional to a $250,000 line of credit. We're talking less than 350,000. Okay, Apple valuation. Apple is currently valued at, let's see, Apple, okay, is the world's biggest company by market capitalization with a 394.3 billion. Okay, I want you guys to wrap your head around this. Okay, this one guy, 350,000, owned 26% of almost 400 billion. That's 100 billion that he owned because he had the money when Apple needed to start. Okay, then original Amazon investors. Let's take a look, guys. Okay. Okay. A group of families and friends. Take a look at this, guys. Group of families and friends. Each got 1% of Bezos' firm for 50,000. An astonishing 14 million percent return now makes each of those shares worth $7 billion. Okay. The reason why, it is important to actually do this is because what happens when the perfect opportunity lands in your lap and you don't have the money to do it? Really think about that. What happens when the perfect house comes along at the perfect price in the perfect neighborhood and it's completely underpriced and you know that you're immediately going to buy it and walk into an extra $100,000 or $200,000 worth of equity, but you can't do it? How's that going to make you feel? Or let's say when there is a laundromat that's available for sale. And by the way, guys, I'll be honest, I'm looking at buying laundromats right now. When there is a laundromat available for sale and the laundromat is turning, $25,000, $30,000 a month in profit, and the owner is like, listen, David, I am old. I am in my 80s. I am just tired of running the thing. I will teach you how to run the thing. I want what I want is I make $20,000 a month. It makes me about $250,000 profit every single year. So because of that, my valuation for this company is about 1.2, 1.3 million. What I need from you is I need half of that, and I need 20% of the profits for the next 10 years in order for you to overtake the business and manage it, but I'm going to teach you how to do it. Is that something you're willing to do? And when I have the money, I'm able to say, yeah. And the reason that I'm able to say yeah, and I'm able to do that very quickly in my head is because I just understand. Oh, a $500,000 loan means I'm probably going to be spending $4,000 a month. So if I go ahead and I use $500,000 in order to acquire a business that's cash flowing $20,000 that I only need to spend $4,000 a month for, and I'm giving 20% of those earnings, which works out to another $4,000. It means that I'm making $12,000 a month every single month for overtaking someone's business. If I steamroll those payments in order to get out of debt with my creditors very quickly, it means that I'm going to go ahead and be out of debt probably in 5 years total, and then everything from that point on is net profit in my pocket. And that is if I do not find ways to make the business more efficient, and if I do not find ways in order to increase the revenue. So when you start taking a look at the market, when you start taking a look at the avatar, when you start taking a look at the individuals that are involved, truly and honestly, okay, you need to sit there and understand like, oh, like there is room, there is opportunity for me to actually take advantage of things, right? One of the things that I like to really take a look at is, and one of my partners runs an incredible program on this, on buying and holding exotic cars and using them as um, as a safety for funds, okay? Because if you buy a car at the right price and you know that there's a limited amount that are going to be created and they have all the right bells and whistles and the title is clean, you could almost guarantee, not guarantee, but almost guarantee that the car will maintain its value or will increase in value. Now, this doesn't work for every car. It doesn't work for the Honda Accords and the Hyundai Elantras of the world, but for the Ghosts and the Phantoms and the Lamborghinis and some of the McLarens and the G wagons of the world, it does, and it works phenomenally well. So all of a sudden you buy a car, and the car that the real market value for it is about $80,000, but you get it for 62. And all of a sudden you're like, okay, I'm going to be spending about $700 a month on the car. That's something I was willing to pay out of my pocket anyway. For a nice car, you have a great time driving it. You drive the car for 12 months. Okay, costs you $8,400 plus insurance. Let's call it 12,000 even. You go ahead, you spend 62 grand on the car. Actually, you spent 12,000 in financing. Okay, the car was worth 62. You bought it at the price of 62. You turn around and you sell it for $80,000 a month, a year later, and all of a sudden, you have made $18,000 on that car, including getting back the $12,000 that you had paid for it. So, in that scenario, guys, you actually got paid $6,000 or $500 a month to drive the car. Why? Because you had the right credit profile, you had the right funding in place, that when the right opportunity came around, you were able to say yes. Now, can you do this with personal credit? Yes, you can do this with personal credit too. But business credit typically has better terms. Okay? Business credit typically has better terms. So part of the reason that, we're so big on this is we understand a few things. And this isn't to paint a bleak picture. This is just to be very, very honest. Okay? There are so many misconceptions around business funding, business lending, credit, personal funding, asset management, wealth management, taxes and avoidance, not evasion. Evasion is illegal, avoidance is not. Minimizing the amount of taxes that you pay is absolutely legal. Okay? But there's so many misconceptions around that. And what we really want to do here at TruePro Lending is take the misconceptions out. And the first step that you can take is click this Apply Now button and fill in your information. And then one of our staff members is going to get back in contact with you after you confirm your email. One of our staff members is going to get back in contact with you. And when they do, what they're going to do, ladies and gentlemen, is they're going to start talking with you about what your goals are and what it is that you want to achieve. They're going to do an honest assessment of where you are at. And if you need to change or fix your credit, we're going to let you know. If you need to adjust your goals or your timeline, we're going to let you know. One of the things that I am very, very aware of is that in this world of business funding, in this world of business in general, you need to be prepared. Okay, you need to be prepared to say yes when the timing is right and no when the timing is not. No other way to put it, guys. You need to be prepared to say yes when the timing is right and no when the timing is not. All right? But being prepared is the most important part. Being prepared is what lines you up to be able to take advantage of the best things coming to you. And so, even if you just want to communicate with us so that you can find out what it is that you need to do in order to fix your credit so that business funding is an option for you, we're going to let you know. If that means that we need to take a look at creative ways of getting your credit profile in order, we're going to let you know. If that means that, we need to open up a couple more personal accounts for you before we could go ahead and undertake the business funding, we're going to let you know. 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 We are going to let you know. And the beauty is that because we have partnered with a huge number of banks and a huge number of banking professionals, we already know what they're looking for. So what you can hang your hat on, we want to take the confusion out. Even if all you do with your consultation is, David, how is it that I get my credit ready for business funding? We're going to say, you need to do this, 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 this. Great. Do you want us to do it for you, or do you want to do it yourself? Okay, if you want us to do it for you, this is how much it costs. We'll go ahead and get started on dispute letters and finding the right authorized user lines of credit and da-da-da-da-da. We'll do all of that to make sure that you are prepared to go ahead and walk into the bank when we tell you to in order to get the business funding that you require. And by the way, the timing of when it is that you go ahead and you do everything is incredibly important. Because if you do things too early, it actually can work against you. And if you do things too late, it absolutely can work against you. We are partners in this. Ladies and gentlemen, we don't get paid unless we get you money. Go figure, right? We sound like those personal injury lawyers, right? No payment unless we win. Well, guess what, guys? No payment unless we win. We are here to support you in all your dreams. We are here to support you in your winning. We are here to support your business aspirations and help you achieve everything that we know is completely achievable. And we have a long list of clients that already are telling us, guys, that we are second to none. We are really good at what we do. And if we tell you yes, it's a yes. If we tell you no, it's a no. And if it's a maybe, we're not going to hide that from you. We'll be honest and let you know, maybe, maybe not. I hope this video has been helpful for you. Let me go ahead and stop the share and just come to you. I hope this video has been helpful for you. I'm running on very little sleep because I've been helping clients and, my hair's a little bit messed up and I got some bags under my eyes and all that other good stuff. But I hope that this was helpful for you. I hope that you are beginning to see why it is that business funding is so imperative and what it is that TruePro Lending and TruePro Finance could help you achieve and how it is that we could be a shortcut to your success. Because what I do believe is this, with the right amount of money, ladies and gentlemen, that the ability to make more money is almost guaranteed. If you have the right partners, if you have the right teammates in your corner, that making more money is almost guaranteed. We want to be one of your partners. And how you do that is you go to our site, you fill out that information, and let us start the process of actually helping you secure the business funding that you need in order to achieve everything that your mind has already conceived. I'm going to leave you with this real quick, and then, I'm going to be done. Because I didn't want this video to be more than an hour, and it looks like we're right about there. If the dream has been deposited in you, there's no reason that it should not be achievable through you. Sometimes you just need the right people to come in your path and be willing to help. And if you're watching this video, I firmly believe that we could be one of those right people in your path at the right time to help you achieve everything you need to. I look forward, and my team looks forward, to assisting you in fixing credit, getting prepared for business funding, and acquiring the business funding that you need to make your wildest dreams a reality. Thank you so much. I hope this was good for you. God bless you and have a great day on purpose. My name is David Liciaga, CEO of TruePro Finance, and I look forward to serving you with all my heart. You have a great one.